Hello guys, and welcome to Daily Market Movements. Welcome to another episode where today we're going to be analysing the crude oil markets. But just before I start today's video, if we head over to my Signal page, if you are still wanting to join my Signal service, then please do not hesitate to visit my website, dailymarketmovements.com. I've left the website link in the description of today's video. I charge a very small fee of $29.99. But back to the crude oil markets. Crude oil actually had a positive day to end the week. It's been a very bearish week for the crude oil price chart. I think we've fallen rather significantly from a swing highs to a swing lows. We were down around 11% at one point, but all in all, we ended the week down 7.5%. So not a great week for the crude bulls, but it's good and encouraging to see that we haven't continued to fall here going into the weekend. I think now we have some supportive areas. Of course, we have the bottom of this fib chart, which is down at $93.44. That's exactly where we bounce, and you could even argue that it's actually offering quite a supportive area because this is where we bottomed on the 15th of March. So this is the layout for gold going forward. If we were to take out those swing lows of this week, so if I just draw that here on your charts for you, and I'll put that line a little bit thicker so you can see it. If we were to take out this low here, then that would be extremely bearish for the crude oil prices, and that to me would signal a move to at least $90 a barrel and then potentially even $83. But the good news is that I don't anticipate that we will. I think that we will snap back up towards a 50-day EMA. If we can recover the 50-day EMA here, that of course then opens the door to that 0.236 fib level up at 102, and if we break above that, then we are flying. We're back up towards at least $107. I think energy is going to continue to benefit from the current environment that we find ourselves trading in. You know, even if Putin come out tomorrow and withdrew troops and stopped the war completely, you know, a lot of damage has been done to Ukraine, and I fully anticipate those sanctions to be in place for at least another year or two. You know, I don't think the US government and European governments are going to come out and say, perfect, let's, you know, thank you Putin, let's just take away those sanctions. You've pretty much just gone and blown up a whole country, but now that you've stopped that, we're now going to take off the sanctions. So thank you. I don't think that that's going to be the case at all. I think that those sanctions are going to stay in place, and the supply and demand for crude oil is of course going to you know, outweigh. So you know, of course there's not much in terms of supply at this moment in time, but there's plenty of demand. There's one main risk here for the crude oil markets, and that is probably being a victim of its own success. And when I say that, I mean with regards to inflation. Now, of course, crude oil has caused inflation to go extremely high, but it's not so much because of crude oil, but it's you know, the inflation number now in the US, in Europe, it's kind of getting out of control, and that's why we've heard from the Fed this week that they're going to have to hike interest rates rather significantly and very quickly to kind of contain that inflation. But everything's gone up in terms of food prices, fuel prices, home, energy, everything, and you know, this may now cause consumers to basically spend less on fuel, and I think that we did actually see that this week, where we've had the oil inventories, and surprisingly, we had more crude oil in stock than what was actually anticipated. So it'll be very interesting to see how that continues. You know, to see that oil inventory number on Wednesday. But at this moment in time, I do personally believe that we could go and retain at that 50-day EMA, which will be incredibly bullish here for the crude oil markets, and then we might be able to tweak this uptrend that we've been trading in, and it could look maybe, you know, something a little like that, which is still bullish.